All right, hello, welcome to the morning session for the New York AM Silver Bullet for Thursday, August 27th, 2026. Here we are, Jackson Hole Symposium Day, Thursday, on a rather wonky week, I would say. At this moment, I'm not applying or implying much of a bias per se. I don't think this is the way to go to predict the bias, because it could theoretically go either way at this moment. So there is no higher time frame bias I can support myself with, but I have some key levels from higher time frame annotated, and the price is ticking. There are some highs, there are some lows. So my goal for the session would be to frame like a 15 to 20 handles type of scalp. I mean, the ranges seem to be quite large. Maybe I would go for like 30 handles scalp, if I can frame that, obviously, and if it will make sense for me as well. So yeah, if I will be able to do that, that's probably all I would look for this session. I'm not really interested in anything else, as it just doesn't really make it for me in that regard. So yeah, that will be a cool little session here with some tape reading, with some potential scalping ideas. And yeah, so what do we have in here? We are technically trapped in between two higher time frame PD arrays. One which is discount array, and one which is premium array. Premium suspension block, and here we have like a volume imbalance on the daily chart. As you can see, so far we are bouncing between the upper half of the discount array and the lower half of the premium array. So is it really bullish or is it really bearish? Hard to tell, right? Hard to tell. Which one gives the way first? That will be kind of the clue. If the discount array will trade into the lower half first and maybe even below it, then obviously it would imply that it's more bearish. If it goes into the upper half of the premium array or something like that first, it's more bullish. But that's, I mean, we can't really, we don't have the information yet to say whether it will go higher or lower at this moment. We are basically dead in the middle, in between of both, and that's why I don't want to force any higher time frame idea about it or into it and go without bias. Going without bias is kind of like my bias, however that sounds. So yeah, I annotated here inversion fair value gap for several reasons. First of all, it lays over top of a key level from the daily chart. Second of all, that was the last inefficiency before running out the buy side liquidity in form of relatively cool highs. So that's a likely or high probability inversion fair value gap by definition of things. We do have some relative equal lows down there being positioned, being engineered. So that is something to watch and see as we trade into this inversion fair value gap. The bodies barely but trade slightly outside of the consecutive encroachment into the upper half, but price could not sustain it, as we can see, and it's now leaving aggressively lower. So those lows could be a factor for the price. We'll see. We are still like 4 minutes some ahead of the 10 a.m. So I'm not necessarily willing to assume any trade ahead of 10 a.m. but getting a feel for a price, tape reading it before it is something I would like to do. So yeah, besides that, we would like to see, or we would like to know, where's the first presented fair value gap. And this is the 931 efficiency here. This is the first presentation for Thursday's trading. And that's where we are trading into at the same time at the moment. And it's important for various reasons, right? Because first of all, it's the first inefficiency after 930, excluding 930. It lays exactly at a key daily level here. So it's validated by the price and time. So that's a key PD array. It was used here with the bodies to run into this upper quadrant. Then price turn around, use it here as an inversion fair value gap, send it to the relative equal highs. And now it trades kind of like around it without giving much light to it. That's fine, that's fair. By the way, we just took the equal lows sell side off of this inversion fair value gap right there. And still 2.5 minutes until 10 a.m. We basically banked the buy side liquidity here, the sell side liquidity here, and yeah, this is like a key moment whether we will see any continuation and or we will see just a seek and destroy type of condition where we go for both sides of liquidity only and focus only on buy side, sell side. But yeah, relative equal lows definitely taken out here, pushed. Also traded into the lower half of the opening range gap. This is the consequent encroachment of the opening range gap for today. We opened up with the premium gap. This is the low of it. Yeah, this run on the equal highs was like rather shallow, rather not efficient run, I would say. No bodies were placed above it, only wicks. So this could be revisited in my mind. The buy side could be revisited in my mind. So that was smooth. That was damage being made here, clearly. And we trade also in a discount array. Couldn't quite reach the octane here. So all of these things kinda favor, in my mind, the buy side liquidity here. Just looking at what we see in here. Doesn't mean there is a setup yet. But that's kind of what I would slightly maybe favor going into this silver bullet hour. Because yeah, it looks quite hectic, it looks quite unorganized. And it looks like they ran the buy side here, but that was just really like a blip, only with the wicks. and that was like a pronounced purge on liquidity. So I would more so like to run this buy set again. That's kind of what I would suspect. So now 10 a.m. hits, the silver bullet starts for the good measure. We have a CB in here. That's on the other hand a last inefficiency before running the equal lows. So that has quite some chance to become an inversion fair value gap right away. And we have the first presentation here right above it. So that's a nice little cluster of PD arrays that could offer us a little bit of a lift to the upside if we can go above them and then retrade back into those. So you can see we are closing above it right away. Closing above it right away. And now trading back into this potential inversion fair value gap and the first presentation. Let's see if we can get another touch into it. Or not. Regardless, I would like to potentially scale in some longs in here in the first presentation and this inversion to offer me this 15 to 20 to maybe 30 handles of a run. We just tap into this inefficiency here, which is more of a premium for value gap. So now let me see. I would like to quickly check. So ES is not matching the lows yet as it is. Nasdaq made that lower low. ES is not matching that yet. Well, I missed that little touch there into the first presented value gap. There. It already gave 15 handles though. Okay, let's maybe use 20 handles. Yeah, $80. $80 mental stop loss. Because yeah, these candles move fast. I mean the volatility is large, so I gotta have in mind what I'm willing to risk first. Because I might not be quick enough to set up the limit orders if I'm going for those little scalps like this. But yeah, again, I mean, 2 times it traded into it, 2 times I kind of missed them. And that was kind of like the idea that I was looking for, the scalp. It definitely delivered, so that's fine. All right, let's see. We'll watch and see if there will be a different chance, different opportunity that will maybe spawn or not. The hour just began, so let's not get emotional about missing a little scalp. And yeah, let's enjoy the price action. All right, so now we are back at this inversion fair value gap here, which initially offered this huge run lower into those equal lows. That's a premium array that we are turning into right now. So I don't necessarily want to be buying at a premium array, even though I do suspect that it may want to reach and explore the buy side liquidity on a deeper basis. That's just like a rule of thumb that I like to follow, and I just try not to buy at the premium race before they inverse or are being reclaimed. If you have a very strong bias, you can do it, but if you don't, then why would you do it? So yeah, so far we are still in the lower half of this inversion for value gap, not exploring the upper half. So that might be a little bit, a little bit of weakness might be coming into the equation here. We'll see. And there we got the weakness. So now the first printed for value gap and this inversion is the next order of business. We just touched the first presentation. I don't think I would like to be buying this blindly, just as it falls into it here. Like clearly it would, it gave a nice reaction here, but yeah, just for the sake of where we are in terms of this price action, like this is somewhat of a mess. This is probably high resistance type of liquidity and conditions where we might see some adversities and some tomfoolery happening. And it's Jackson Hole Symposium, so there is a huge mix of things that can be tricky, to say the least. But yeah, we touched the first presentation here, and it rallied literally 50 candles on this 1 minute candle here in one swing. But yeah, let's see what we'll do, because we are kind of trapped in here again between this premium inversion for value gap and this discount inversion for value gap, plus this first presentation obviously, but kind of like trapped in between this premium, this discount, and we are just playing ping pong in between. So yeah, Emo, I'm kind of suspecting a run into this inversion, this lower one here, potentially. I'm not saying that it will definitely happen, but if we cannot breach this on the upside, then this would be the most logical discount to counter with. But yeah, we'll see. So far, it's just all of these candles are just overlapping back and forth, back and forth, back and forth. Tapping again into this inversion. Right, now breaching into the upper half of it. So let's see whether we will leave a body there or not. Generally, if it goes inside of this here, it would need to reject it quickly afterwards, if it's bearish, obviously. So we did close in the upper half. So now let's see if the lower half will be defended by the price, meaning we should see no closing prices inside of the lower half. It should be completely being defended if it's bullish. And I'm playing that devil's advocate because I'm assuming that the buy side is likely to get potentially pushed on a deeper basis. So on this candle, we trade outside of it to the upside, but we can't even reach the consequent encroachment. Bullish or bearish? I would say bullish. I would say bullish. And the next candle opens up, immediately trades higher outside of this inversion. Let's see how it will close. We close outside of it. We couldn't reach the consequent encroachment. Bullish or bearish? I would say bullish. I would say bullish, and I would say we have buy side liquidity here to potentially work with. So now, as we close above it, this should act as reclaimed bullish for value gap, right? And again, the lower half should not see any bodies inside, and all of the bodies should be in the upper half. And we should attack the buy side liquidity, and that's probably should be it. Yeah, again, perfect touch to the high, and nice stretch towards the buy side liquidity. Is this bullish or bearish? I would say bullish. Should run the buy side. Right, so now we are falling short of the buy side very, very, very slightly, pulling back into this reclaimed now B. I. C. busy. So let's see if the upper half can reject any downside. And it did on the first candle here. Well, I didn't bought for some reason, couldn't hit it. But yeah, from 60 to 80, that's 20 handles already. That would be like the scalp. I guess my mouse is low on battery. But nonetheless, is this bullish or bearish? It's bullish, and it should attack the buy side liquidity, and this should act as a bullish order block also. So close to the buy side, it should just see a nice little expansion through that. The mean threshold should not be violated of this large down candle here. I'm referring to the bodies. The mean threshold was just touched. I don't want to see any close below it. We might get additional touch to the high of this inversion. I mean, reclaimed bullish value gap though. But it closes below the mean threshold of this down candle, and I don't like that. I don't like that. Can it still go higher? Yes, but I don't like that, because that's a warning sign usually. That's a warning sign. That was a nice little reaction here. This candle was validated by trading above the opening price, and now trading and closing below the mean threshold. I don't like that. If I want to be continuously bullish, it can be, but that's like a warning sign. It's really crouching now below this buy side liquidity, so it needs to explore it now deeper. I don't want to see a shallow run like this. I want to see a deeper push above it. That was a rather shallow run so far. Yeah, wicks are gaps. So we have this wick here. That's the premium wick. We just tapped into it there. If you cannot trade through this on a closing basis, and we had this order block that already couldn't support the price on a closing basis above the min threshold, these are like the warning signs that we might see some turnaround. I'm not saying it will happen yet, but let's see. So now, if it's bullish, it should have easy time trading through that weak deeper into the buy side liquidity, because there is like other pools of liquidity above it that it can reach. For example, those equal highs here. So that's like a reasonable draw, and the London session high is here. So there's quite a bit of room still left to go. But again, we are tapping into this week, but the bodies are not really permitted to go inside of it even. So that to me is suggesting some weakness. Yeah, we are spending quite some time around here. Still no bodies were permitted to trade inside of this week, this premium week. So I perfect touched the min threshold of the order block there. And now trading up into this consecutive encroachment. So we would want to see this just rip through this buy side liquidity pool on a deeper basis. So I trade into this slightly above the consecutive encroachment, but the body closed all the way down here. Is this bullish or bearish? That's bearish. And now it even formed this premium wick in here. With its own consecutive encroachment. The next candle opened up here, traded, couldn't reach the consecutive encroachment, and now it's expanding lower. It's around here. Is this bullish or bearish? Right, it's still trading, so the close here that's not as bearish. It's not as bullish either. I'm not sure whether it closed above it or not. I think it traded and closed exactly at the level. So I wouldn't say it's bullish. but it's not maybe as heavy as initially it seemed like it is. So let's see. So we have now this discount week also. We trade down into it. The body pulled back higher, slightly higher. And yeah, it really needs to start purging above the buy liquidity deeper and into this upper half. Otherwise, it's kind of like running out of steam. Feels like it. So ES is also looking for this intra session high from 946. So Nasdaq should follow up with upside too. And we see that. Follow through above the buy side. So that's what I want to see. It was a little bit sloppy in here, but yeah, it finally delivered. So that's quite interesting. We have the buy side liquidity here, equal highs, and the long session high. So I'll be watching that as next potential objectives. And still just keeping a track of the candles. So yeah, now this week, as we went above it, it was a premium week. Now it's a discount week. So if it's bullish, we don't want to see any bodies late in the lower half, right? That would be like the go-to. So I have this premium week. We open up, we trade into the consecutive encroachment, and then pull back lower into the consecutive encroachment of this discount week now. So we are at the crossroads in here. No close below the consecutive encroachment of this week yet. So if it's continuously bullish, it should reject. It might weak below the consecutive encroachment. That's fine, but the bodies should like stay inside the upper half and see some challenge of this premium week, right? So yeah, this candle opened up, trade to the consecutive encroachment of this discount week, and closed higher. So is it bullish or bearish? I would say reasonably bullish. So I would expect potentially this short-term high being challenged. this candle open up, clear those equal lows into the lower half, and now extending below it, right? So that is canceling the bullishness already. It's not bullish. And we right away traded to this lower reclaimed bullish fair value gap. Clearly close below this discount week, which now goes back to being a premium week. So now I'm suspecting a potential run into this BC. But yeah, not quite liking this. Definitely offside here. All right, this quick rejection is something I need to see here continue. Yeah, it would need to remain kind of heavy here. It kind of doesn't, so that's kind of problematic. If this candle closes strongly above this mean threshold, that's problematic. It kind of didn't, so last chance for a little bit of rejection. Otherwise, I can easily get stopped out here. And yeah, I feel like I got involved into some troublesome position here. Yeah, I had the opportunity to close this down at near break even or break even even. I didn't, I hesitated. I was like hoping it will follow through, but yeah, it clearly was not interested in doing that at that time. And here I am taking a loss like this. Well. Yeah, sometimes I feel like I'm talking too much and I'm missing the time when I should be entering or doing some action. And yeah, it's kind of hard to really like talk and explain and at the same time push the buttons on the 1 minute chart. Well, stop me here exactly at the high and pull back again lower. It's still open, I guess, after this close, but nonetheless I got stopped out, so it is what it is. And I took 137 even of a loss, attempting to do the scalp. Yeah, and now it's stretching quite nicely. Let's see if it will reach this busy in here. If it will, then yeah, that would have been like a victory there, but stopped out exactly at the high. Like this candle's high. Let me see. This candle's high is 29,604 and a half. And my exit stop out is 29,604 and a half. So that's exactly the highest tick. And now it's basically at the target that I was looking for. So well, I mean, yeah, that's a little bit annoying, a little bit pain in the where, but it is what it is. I gotta be doing silent streams though. But yeah, regardless, whatever. I'm calling a day here as I don't feel to entertain this anymore. And well, thanks for watching. I wish you a pleasant reminder of the day. Good luck, good trading, and see you next time. Bye bye.